Hello everyone, I'm Marty Pospischil and welcome to 2021. Happy New Year to everyone. I hope you're all healthy and well. I'm still sporting my holiday beard, which will come off in the next couple of days, I'm sorry to say, but I've lasted this long. So let's jump right into my update. Got a lot of good info today. Let's talk quickly about the sales. Now, as you recall, the sales ratio, which is the metric we use to cover how active the market is basically the absorption rate, and it determines price fluctuations. If the ratio is greater than 21%, there's upward pressure on pricing and we're in a seller's market. If the ratio or the absorption rate is between 12 and 20%, we're in a balanced market, so it doesn't favor the buyers or the sellers. But if the sales ratio is below 11%, we're in a buyer's market. So let's look at what's happening as of last month. This is fascinating. You'll see some very interesting stats today. So as of the stats at the end of last month, the BCREA and the REBGB are predicting a 2% increase in pricing this year, and the sales ratio is currently at 34%. Now remember, 21% is a seller's market, and we're at 34. So extremely active market we had over the past month. So things are getting quite busy. Overall, if we look at total listings from the previous year, we are up 4,500 listings from last year. Total sales, 1,554 compared to the previous year this month. And the sale prices are up 8% year over year. So some really good stats showing how active and hot our market is. And let's look at the table I put together every month. We've got detached houses, year over year activity up in Metro Vancouver, 71.3%. Incredible increase in activity. We've got the benchmark price up 10.2%. Metro Vancouver houses, and as of last month, we're up 1%. So just in 1 month alone, houses have come up in Metro Vancouver by 1%. Attached townhomes and duplexes, sales activity year over year up 62.9%. Incredible. Benchmark price up 4.9%, and as of last month, virtually no change in price. Attached apartment condos were up overall activity year over year, 40% from this time last year. Prices up 2.6% and no change from the previous month. So you can see the biggest gains year over year have been in detached. We've seen that over the last couple of months. So what are the drivers in our market? Again, not a lot has changed, just to emphasize. The main thing is money's cheap. Mortgage rates are very low. You can borrow money at incredibly low rates, somewhere in the range of 1.6 to 1.8% for mortgages. I don't remember ever seeing that in my career. Incredibly cheap money, so that's definitely helping. Everybody has more money, and the reason they have more money is they're not traveling. They didn't go to Europe this summer. They're not going to Maui over the holiday period, and they're saving more money. Actually, 14% is the household savings rate. Normally, annually, we see about 2-3% of savings. So people are accumulating some cash. The demand for space, that's the underlying emotional driver in our market, is the trend for people wanting more space, larger homes. People want to have more outdoor space, bit of yard space, bigger balcony. So that upgrade demand is extremely high. And of course, what's keeping that driving market up is the supply is still low. We're seeing inventory levels not increasing, whereas the demand is increasing, and that's what's shifting that sales ratio even higher and providing that upward pressure on pricing. So our upward demand is still very high. These are some interesting graphs that I thought I'd throw in, just talking about low interest rates. This is the historical 5-year posted rate since the beginning of time, 1970. You can see we had that peak. You all remember the 1980s, well, maybe not all of you, but the Scalbania days where the interest rates hit over 20%. Can you imagine if that happened today? Catastrophe, anarchy. And then the rates, of course, came down. But if you look at the discounted rates, look at where we are today, under 2%. And even over the last 12 years, we've never seen anything like that in the discounted rates. So money is cheaper than you can ever expect to see it again. That's a big driver in the market. Here's what happened the last time the mortgage rates were this low. You can see we had record activity in sales. So mortgage rates are indeed a big factor in driving our market. What's the forecast for rates? Well, you can see the prime is expected to stay low, and the rates are expected to stay low through the year, but at some point when our economy begins to recover, the interest rates will start to increase. They always do, but that won't happen until we see an economic recovery. Then you'll see a start of an increase in the fixed rates. The variable rates will remain low for a little bit longer, but you will see that increase. Very interesting forecast from the BCREA as well. Here's one of, again, the factors that's contributing to this hot market. Here is the actual inventory levels. The red line is the actual inventory levels. You can see how through fall, overall in BC, the inventory levels have dropped, whereas our demand has been increasing. And you can see here is the actual liftings activity that they predicted to happen. Here is what's actually happened. And that's why a lot of the original forecasts in spring of this year for that big collapse of the market never happened, because this inventory increase, this big jump in listings, never happened. People did not panic list. The inventory levels actually dropped. People waited to get their home in the market. If that didn't happen, we'd be in a completely different market right now. That's a very important graph to look at to show how important inventory levels are to our market. So again, COVID-19, vaccine, etc., how is that impacting mortgage rates, and how is it impacting our housing market? So mortgage rates, again, they will only begin to increase once a solid economic recovery is underway. People start traveling, they start eating out, they're spending money, and that's when people are going to get rehired into a lot of the entry-level jobs. Our economy will start roaring up again, and once the economy starts boosting, you'll see those inventory levels increase as in those forecasts. So that's an increase. The housing market also going to increase as well. For now, it will continue to be hot, depending on those inventory levels staying low. But CMHC, as of the end of last year, is still predicting house prices to fall by as much as double digits when the impact of the economy and the job losses hits our market. It's just a matter of when. So CMHC is forecasting a dramatic drop in pricing. Real Estate Board of Greater Vancouver is projecting a price increase of a couple percent this year. So there's a bit of inconsistency in the forecasting. Nobody really knows, because we've never been in a pandemic like this in our market. So the forecast is, for now, for the market to continue to increase in activity. Good to hear for a lot of home sellers. Home buyers, take advantage of this. We just don't know how long these low rates are going to last, and how long these inventory levels will remain as is, and this market will remain as hot as it is. So it's anyone's guess, but there is a forecast for eventually that correction to come. Again, we just don't know when. Again, let's look at some employment numbers. This is really interesting stuff from BCRE economists. You can see all the different areas throughout BC, how when the pandemic hit, of course, the employment levels dropped, and then we had a gradual recovery from late spring, summer, back above the pre-COVID baseline. You can see the Lower Mainland's a little bit lower, and I think the main reasons for that is we've got a lot of tourism, accommodation, and food services here in the Lower Mainland compared to perhaps the rest of BC are less impacted by tourism and the food services, etc. So that's very interesting. But the really interesting stat here, which I pulled out from that information, is the Canadian employment lost 63,000 jobs in December. It's a lot of jobs. But BC grew by 3,800 jobs in December and 24,000 jobs the previous month. So for some reason, BC is a bit of an anomaly. We were actually at 99% of the pre-COVID baseline for employment rates. So BC is being impacted less than the rest of the country. We're doing better than the rest of Canada. Quite interesting. We're busy, as I mentioned to you in my last update. We're getting multiple offers on houses. We're getting incredible response because of that demand that's out there. There is such high demand and not enough inventory for people to choose from that through proper marketing, we're getting multiple offers and selling these homes at record prices. So it's quite interesting to see. So what's hot and what's not in our market? Let's look at specific areas. Remember, sales ratio again, under 11%, favoring the buyer, downward pressure on pricing, 12 to 20%, balanced market, not favoring the buyers or the sellers. And as soon as we hit 21% or higher, we're in a seller's market, upward pressure on pricing, multiple offers, high demand, and we're seeing a change every week in the market in that rate. So let's look at houses. Incredible. Remember last month we were at 19% previous to December. Now we're at 22%. So houses are getting hotter and hotter. This is on the west side. And you can see the various price bands. As soon as you're around 2 million to 2.25 in the west side, the sales ratio is at an incredible 60%, and 2.25 million to 2.5, 93% sales ratio. These are ridiculous numbers. 2.5 to 2.75 million, 87%. So extremely active market, Vancouver West Side detached housing. And you can see how that's increased over the last few months. Let's look at townhomes and condos. 33% sales ratio. So compared to my last update, that was at 20%. Look at the jump. So the activity over December was incredible. And if you remember, the inventory levels in December dropped, the demand increased, so that pushed up the sales ratio to 33%. Again, some incredible numbers in here. You can see that demand for attached housing has grown dramatically as well, in addition to the detached housing market. Okay, let's look at downtown. I separate that out because it's a little bit of a different anomaly at 27%. Again, a big jump from last month. A 10% jump in sales ratio. Incredible. So we're seeing a lot of the spillover of demand now going back to the downtown area, which is pretty quiet because of its density. The previous months, you can see it's increased, and then a big jump in December. That spillover into downtown, 27% sales ratio. So all three segments of the west side, detached, attached, downtown condos, townhomes, all in a strong seller's market. East side, even a crazier story. Last month we were at 31% sales ratio for detached houses east side. We're at 43% now, double what you would need for a seller's market. Look at, forget about finding a house between $1 million and $1.25 million. Sales ratios at 133%. 1.25 to 1.5, 78%. 1.5 to 175. 58% sales ratio. Super hot market for houses on the east side. Doesn't look like it's letting up. Inventory's trickling in, and there's this vast demand sitting there waiting for these listings to hit the market. Again, you can see that big jump from last month. Quite interesting. Condos and townhomes, east side, 45%. These are crazy numbers. 45%, a jump from 31% last month. So big jumps in activity. Again, inventory dropped. This is probably going to soften a little bit as we see the inventory levels come in over spring, because typically we do start to see listings in February and March. So pretty incredible numbers. Condos, townhomes, again, 45%, Vancouver East Side. Overall Metro Vancouver sales ratios, you can see as of the summer, everything, a detached jumped a little bit earlier into a seller's market. The green band is a seller's market. The white band is balanced, and the light green is buyer's market. So we have jumped in all three categories, townhomes, condos, and detached, into this seller's market range as of summer. And look what's just happening over the last couple of months. Off the charts. Just off the charts activity for all product. Really, really interesting to see these numbers. So what's happening in the burbs? Again, no surprise based on the stats that you're seeing. You can pretty well see all areas: West Vancouver, North Vancouver, Burnaby, Port Moody, East Side, New Westminster, Surrey, North Delta, everything with the green increased sales ratio. And another stat, really interesting to see in each of these neighborhoods, if you freeze my video, you can go through and read all of the inventory levels dropping. Minus 36%, minus 46%, minus 38%. There was no inventory last month. The demand was still there, and that's what pushed all these sales ratios up. So no surprise on this. Throughout all of the Lower Mainland, pretty well, a little drop in Langley and a little drop in Ladner, we are seeing an increase in the sales ratio. So hotter market, upward pressure in the entire Lower Mainland pretty well. For detached, let's go back and look at attached. So now we're looking at attached. Same story, except on attached, absolutely every area, apart from Pitt Meadows, had a slight drop. Every area in the Lower Mainland for attached is now in a seller's market. And again, big reason, look at the inventory drops, anywhere from 20 to 40% drop in inventory over December. We just don't see, here's a 54% drop. We just don't see a lot of people listing in December. Again, the demand remained high, so that's why we're seeing that sales ratio go up. So quite interesting activity throughout the Lower Mainland, everywhere getting superheated. What next? I always laugh at this section because nobody knows. We're in uncharted territory. We've got one body of economists saying the market's going to increase slightly. We've got another saying it's going to take off this year. And we have a third saying, look, you guys, this is all really rosy right now, but there's that big black cloud coming. We're going to see a correction in the market when all this fallout from that pandemic eventually hits. So nobody really knows. One of them's going to be right. We just don't know which. But to sum it up, I love this graphic I put together last month, so I'm going to continue with it. People have more money, okay? So typically, what do they do with more money? Besides buy a few things, they're investing in real estate. Typically, not everybody has more money, but the vast majority of people are saving about 7 times what they would be saving in a normal world. And we're not normal now, so people aren't spending, they have more cash. And what that's doing is that's providing a demand for downtown condos, attached townhomes, and all the way to detached houses, okay? So that demand, for all of the housing is of course there. The money is cheap to borrow, so the mortgage rates are historically low, and that's allowing people to upgrade, borrow more money based on their incomes. So that's feeding all three market segments. Then we're getting that upgrade demand from smaller condos to larger condos, perhaps to townhomes that are more spread out, and from townhomes and half duplexes to detached houses. And then of course you get the jump from condos right to houses, and that's why the demand increases as we go through the attached right to the detached. We're getting that whole flow through the market. It's very interesting to watch. Thus, we're getting those high sales ratios. Here's some stats that we graph month to month from the Real Estate Board of Greater Vancouver. Here's your typical year. You get a big cycle of activity in spring, it drops in summer, and then we get a little blip again in fall. We've got the spring market, the fall market. The yellow line is what happened last year. So we've got, here we are in March. That's Bonnie Henry shutting down the market in middle of March, and rightly so. She made the right call then. Everybody canceled their holiday plans and stayed in, and the real estate market activity dropped to a halt. And then, of course, it began to increase as we hit phase 2, and things started to open up. We hit a little bit of a plateau over the summer, and then a bigger jump in activity over September, October. Prices continued to go up, but the actual number of sales dropped for the only reason because there was not enough product to buy. The demand was there, not enough inventory. Inventory, low rates, demand for increased size of housing, all of these things are playing a role. It's quite interesting to see how 2020 line completely stands out from all the other years for a pandemic year. Home sales, again, from BCREA projected to increase over 2021. And the average pricing, okay, so here's what's actually happened. Prices, of course, did fall in March after the shutdown. We've had a gradual recovery in pricing, and the prediction is that there will be a slight slowdown in pricing and then a gradual jump towards the end of the year for pricing. Again, that's the forecast from BCREA. Again, a little bit different from CMHC, and here's where we are right here. But really, let's put all this in perspective. Let's look at last year compared to, again, real estate in the beginning of time, 1977, when we started tracking all the data. Here's 1980, when we saw that increase in mortgage rates and a gradual increase in our detached market. But if you look at last year, that's where it is. In the whole scheme of things, it's really a small jump. There's the 2020 January line. Here's March. Here's the drop in activity. And here's our recovery. It's almost irrelevant when you look at the whole historic average price graph. I thought I'd throw that in because it's quite interesting to see when you look at that last year as a second in time over the last 50 years. Is really almost not noticeable. That's my market update for January 2021. Happy New Year, everyone. Stay healthy, stay safe, and we'll see you again in a month.